In this video, we're going to talk about what should be your percentage win rate in trading. Stay tuned. Hey traders, a very warm welcome to you. Okay, so this is quite a popular question, and it's something you think about when you're a trader. You kind of look at your results and you think, am I doing this right? Is this really what I should be? What should be my percentage win rate? So what I mean by percentage win rate is how many trades are you actually making money on versus how many trades you're losing money on. So if you were to say, okay, 50% of my trades are winners, it just literally means that 50% of those are profitable. It doesn't actually get down to how profitable, it just means that they are positive when it comes down to going flat to flat. So if you're scaling or scaling out, that whole sequence of trades counts as one, and what's the win rate means how many of those over a certain number of time are profitable. Okay, so a lot of people say, oh, you should have a high win rate, a low win rate. I've seen guys who are very, very actively scalping. In other words, they are looking for ticks. They are bidding, they are offering, and trading directly in the market. So they're looking just literally for making a market, almost looking for 1 tick, 2 ticks, 3 ticks. Very, very high win rate, 80% plus win rate. But of course, they've got costs involved in that. They've got commissions. And if you're losing and you're paying commissions as well, you're almost getting hit twice. So it has to be very, very high. Obviously, it's very, very intensive as well. There's a size limitation. There's kind of things that mean that this looks great as a headline number, but when it comes down to it, you're going to struggle to kind of scale it massively. I mean, oops, just dropping trading books on the floor. So you're going to struggle to scale it massively. The other thing is, I see, let's not confuse this with, I've seen guys who have 90% plus win rates, but they will eventually blow up because what these people are doing, and you can often see this with some of the kind of people who are selling signals kind of stuff, they will say, hey, we've got a 90% win rate. What they're doing is they're adding into the position, and they're doing it in such small quantities. So it's very small, add. Eventually the market comes back, maybe a tenth of the move. And because they've added and their break evens come down so much, they come out and they make a small profit. That is dangerous because if the market conditions change, you get wiped out. And we've talked about this in previous videos, about scaling in mindlessly just to bring your average cost of the trade down and down and down. Yes, you can do that. You can get away with it for a long time, which is why you see some of these very, very high percentage win rate systems out there. But ultimately, if you're caught on a completely hammering move that doesn't reverse, not normal market conditions, not rotational, then you'll wipe out. So, the chances of wiping out with something like that are very, very high. Similarly for the guys selling options, the win rate is very, very high, but every now and then they end up getting hammered with something that goes against them, and they end up losing many multiples of their risk, or many multiples of their gains, and so it kind of works out in the wash. But we'll come back to that in a second. Come back to the kind of risk reward ratio in a second. But also, let's look at the other end of the scale. You've got swing traders out there who are doing kind of 30%. Every trade, most trades are losers, but the idea being is when they hit the right one, it's going to make up for all those losers. They're looking for that home run. There are guys specifically, in fact, there's even a hedge fund out there. I don't know if it's still running, but it used to be called the Black Swan hedge fund. Same type of thing. In fact, their hit rate's probably even lower than that. I don't know. Go and check it out on Google if that interests you. But they will be looking for, trying to get on board, making small losses. They will be buying kind of way out of the money puts or way out of the money calls, or taking really unlikely bets on the market, not paying off, for months or even years at a time. Then all of a sudden, when one pays off, they make a massive amount of money that makes them many, many, many multiples of what they've lost. So that would be way down lower. So let's go back to kind of a retail scenario. That could be someone who's looking to swing trade and get on the end of maybe a large commodity trend, or a large stock trend, or anything where you believe there could be a good trend happening. So you get on board it, and then you kind of get stopped out because you'd be giving it lots of room because you want to get on board a multiple move trade, or multiple month trade. So you would have your stop wide, and you probably get stopped and you get stopped. Then eventually when you get on it, maybe you'd ride that for several months or even several years, and that's why your win rate is low. But when you're on the end of a couple of good ones, it's going to make you a lot of money. So anywhere in between that, is where most people sit. So if someone says to you, hey, I'm 50% profitable, it doesn't mean anything, because what are we missing? The big part of the puzzle that we're missing, we talk about win rate, is what's your risk to reward, if I can speak, what's your risk to reward ratio? It's a bit of a tongue twister. We all talk about this before. We've all talked about this before, and we've said, listen, it's got to be 2 to 1, 5 to 1, 10 to 1, whatever it may be. Yes, but we also have to look in context of the win rate we've got. If we've got a win rate of 80%, then that can be a lot lower. If we've got a win rate of 30%, then we need to be making a lot more than we lose. Our risk reward ratio on each trade has to be a lot higher, because it's got to offset itself in the wash when it comes out. So what should be your percentage win rate? That is going to depend on your risk reward ratio, the type of strategy you're trading, the frequency you're trading. In other words, how many iterations, or not iterations, how many kind of multiples of the trade you're going to have over a certain period to make this number work out for you. But don't get too caught up on the percentage win rate, because like I say, risk reward ratio is important, as you can see with this formula. But if you're somewhere within that, and things are working out, if you're in the day, if you're profitable and you understand where the hidden risk is in your strategy, then that's the key part. There's no point saying, hey, I've got a 90% win rate, like we were saying before with the guy who's scaling and scaling and scaling in. That's all very well, but the hidden risk in that means that isn't as good as it sounds, because ultimately you're going to get that one big hit that's going to undo all that work. Now that's fine. If that one big hit doesn't undo everything, it maybe undoes half of it, so you're still profitable. So you've kind of got to work it out and look at the pros and cons of each strategy you're doing. The risk reward ratio, said it right this time, risk reward ratio and the win rate, put it together, and hopefully you've got a good strategy that's making you money over the long term. All right, guys, good trading, keep your risk managed. I shall see you in the next video. Goodbye.